Here's an investigative documentary report about how exactly rich and supposedly smart, high-profile investors get tricked in today's world. We're talking about Microsoft, SoftBank, and Qatar's sovereign wealth fund, some of the most sophisticated money managers on the planet, who collectively threw over $400 million at a British startup that claimed to have cracked the code on AI-powered app development. The company was called builder.ai, and it promised to let anyone build an app as easily as ordering pizza. Sounds great, right? Except the AI was fake. The revenues were fabricated by 300%, and the whole thing came crashing down in spectacular fashion in 2025, leaving behind one of the biggest tech fraud cases since Theranos. How did a smooth-talking entrepreneur fool some of the world's smartest investors? What red flags did they miss? Where's the money now? And what does this say about the current AI investment frenzy sweeping Silicon Valley and beyond? Let's find out.
And you've said today's CEOs will be the last to manage all human workforces. What does this mean for businesses?
The story begins in 2016, when Sachin Dev Dugal launched what would become builder.ai with a simple pitch. Why should building an app be complicated? His company would use artificial intelligence to automate 80% of the development process. You'd just chat with their AI assistant called Natasha, describe what you wanted, and boom, your app would be built automatically. Dugal's pitch deck was seductive. Imagine democratizing app development for millions of small businesses worldwide. SoftBank bought in first, leading a $29.5 million Series A in 2018. The money kept flowing, $250 million more by 2023, with Microsoft, Qatar Investment Authority, and other blue-chip names signing checks. By early 2024, builder.ai hit a $1.5 billion valuation. But here's the thing about Natasha. She didn't exist, not as an AI anyway. Instead, builder.ai employed around 700 human engineers, mostly in India, who manually built every single app while pretending to be artificial intelligence. Between 2021 and 2024, builder.ai engaged in something called round-tripping with Versi Innovation, the parent company of Daily Hunt. The two companies would send each other massive invoices, sometimes $60 million at a time, for services that were never actually provided. Both sides would then report these fake transactions as revenue, massively inflating their financial results. Allegedly, there's almost $180 million missing. Builder.ai claimed $220 million in revenue for 2024. The real number? About $50 million? That's not a rounding error. That's systematic fraud. The house of cards started tumbling in early 2025. Concerned investors replaced Dugal as CEO in February. By April, U.S. federal prosecutors had issued subpoenas. In May, creditor Viola Credit seized $37 million from builder.ai's accounts, triggering insolvency proceedings across 5 countries. The collapse was swift and total. All 1,500 employees were laid off. The company owed $88 million to Amazon Web Services and $30 million to Microsoft for unpaid cloud bills. It was the biggest AI startup failure since ChatGPT launched, leaving investors with massive losses and a very expensive lesson about due diligence. Meet Sachin Dev Dugal, born in 1983 in New Delhi, the man who convinced the world he'd built the future of app development. His origin story reads like classic Silicon Valley mythology. The teenage prodigy who built PCs at 14 and coded a foreign exchange arbitrage system for Deutsche Bank at 17. After studying at Imperial College London, Dugal co-founded a cloud computing startup called Niveo in 2004. When he launched builder.ai in 2016, he already had the credentials and connections to attract serious money. But Dugal's past contained some troubling connections. His earlier company, Niveo, had ties to India's Videocon group. one of the country's most scandal-ridden conglomerates. In 2008, Dougal's mother mysteriously received shares in Videocon Hydrocarbons at a nominal price during a financial restructuring. By 2022, India's Enforcement Directorate was investigating a massive money laundering scheme involving Videocon Group, about $7 billion in allegedly laundered funds. Dougal was named as a suspect, accused of helping route dirty money through offshore entities connected to Niveo. When investigators summoned him for questioning, he simply didn't show up. A Delhi court issued a non-bailable warrant in February 2023. None of this deterred Dougal from playing the part of the successful tech entrepreneur. He adopted the grandiose title Chief Wizard at builder.ai, even after being removed as CEO. Dougal understood something crucial about modern tech investing. In the age of AI hype, you didn't need to build real technology. You just needed to tell a convincing story about it. He packaged old-fashioned human outsourcing as revolutionary artificial intelligence, and the investment world ate it up. His strategy worked brilliantly until it didn't. The man who promised to democratize app development through AI was really running a sophisticated shell game, moving money between fake transactions while human workers did the actual building. When reality finally caught up, Dougal faced criminal investigations on 2 continents and the collapse of his billion-dollar empire. Short answer? They got caught up in AI fever and forgot to do their homework. We're talking about sophisticated institutional investors here. Microsoft, SoftBank, Qatar Investment Authority. These are firms that employ armies of analysts, conduct months-long due diligence processes, and pride themselves on spotting the next big thing before anyone else. So, what went wrong? First, timing. The AI gold rush that started with ChatGPT's launch in late 2022 created a feeding frenzy. Suddenly, every venture capital firm was desperate to find the next AI unicorn. Speed became everything. Builder.ai's pitch hit all the right notes: artificial intelligence, automation, democratization of technology. When Microsoft got involved, it created a halo effect. If the world's biggest tech company was backing builder.ai, it must be legitimate, right? The investors fell victim to several classic cognitive biases. There was herding behavior. Once prestigious names like SoftBank were on the cap table, others followed without doing independent verification. There was confirmation bias. They wanted to believe in the AI revolution, so they overlooked warning signs that should have been obvious. The red flags were actually everywhere if anyone had bothered to look. As early as 2019, the Wall Street Journal was reporting skepticism about builder.ai's AI claims. Former employees were raising concerns. A fired executive even sued the company, alleging that the AI capabilities were barely even begun to develop. But perhaps most damning was the financial oversight. Builder.ai went nearly a year without a permanent CFO. They used small, related-party auditors instead of major accounting firms. Basic financial due diligence would have revealed the round-tripping scheme with Verse Innovation, fake invoices going back and forth to inflate revenue numbers. The discovery process was painful. It started with mounting concerns in late 2024 when Builder.ai's reported sales weren't converting to actual cash flow. When Viola Credit conducted their own audit of the $50 million credit facility, they found accounting discrepancies and breached covenants. The investors finally took action in early 2025, installing their own CEO and ordering a forensic audit. What they found was devastating. Revenues overstated by 300%, fake customer contracts, and fabricated sales deals that were never intended to be collected. By then, it was too late. The cash was gone, the credibility was destroyed, and the criminal investigations were already underway. Some of the world's smartest money had been outsmarted by fake AI and creative accounting. In November 2023, just months before Builder.ai's spectacular collapse, Ernst & Young awarded Sachin Dev Dougal their prestigious Entrepreneur of the Year UK award. Yes, the same EY that's supposed to be one of the Big Four accounting firms, known for rigorous analysis and professional skepticism. How does a reputable professional services firm end up honoring someone who was simultaneously running one of the biggest tech fraud schemes in recent memory? It's a question that raises further questions, and pretty interesting ones. EY's award process typically involves reviewing financial performance, growth metrics, innovation, and leadership qualities. On paper, builder.ai looked phenomenal in 2023. The company was claiming $180 million in revenue, had just raised $250 million from top-tier investors, and was valued at $1.5 billion. But here's where EY's behavior becomes criminally irresponsible. They were looking at the same fabricated numbers that had fooled the investors, and they didn't bother to verify them. The round-tripping scheme with Verse Innovation was in full swing, creating fake revenue that made builder.ai appear to be growing at breakneck speed. When questioned about their due diligence process, EY's response was telling. Evaluation isn't part of the process for the award. Let that sink in. One of the world's most prestigious accounting firms gives out awards based on unverified claims. If financial evaluation isn't part of their process for recognizing entrepreneurial excellence, then what exactly is this award worth? It's a bogus recognition that becomes a weapon in the hands of fraudsters. This isn't just professional negligence. It's criminally irresponsible behavior. The world thinks highly of EY, and when fraudsters brandish these awards, they can fool decorated venture capitalists more easily because EY's imprimatur enhances their credibility. The award becomes a cornerstone of legitimacy that helps perpetuate the fraud on a massive scale. The timing makes it even more damning. Just 2 months after Dougal received his award, investors were so concerned about builder.ai's finances that they replaced him as CEO. Within 6 months, federal prosecutors had issued subpoenas, and the company was in bankruptcy. EY had effectively handed a trophy to a man who was already orchestrating one of the biggest corporate frauds in recent memory. The builder.ai case isn't an isolated incident. It's part of a pattern where prestigious awards and recognition provide cover for fraudulent schemes. The award becomes part of the company's credibility arsenal, making investors and customers less likely to ask tough questions. When EY stamps their approval on a fraud, they become complicit in its continuation. This raises serious questions about the rigor of professional award processes across the industry. If EY, with all their expertise in financial analysis, couldn't be bothered to verify basic financial claims before handing out awards, what does that say about the broader system of professional recognition in the business world? EY's embarrassment should serve as more than just a reminder about professional skepticism. When your award helps someone steal $250 million from investors, we don't evaluate financials isn't an adequate defense. The short answer, they probably won't get much back, if anything at all. When builder.ai collapsed in May 2025, the company owed massive amounts to everyone. There was $88 million owed to Amazon Web Services, $30 million to Microsoft Azure, and hundreds of millions more to investors, employees, and other creditors. Meanwhile, the company's actual assets were minimal. Some code libraries, the Natasha AI system that barely worked, and whatever intellectual property value remained after the fraud revelations. The recovery process is complicated by the fact that builder.ai operated across multiple jurisdictions. There are bankruptcy proceedings happening simultaneously in the UK, US, India, UAE, and Singapore. Secured creditors get first priority, and they've already grabbed what they could. Viola Credit, which had provided a $50 million secured debt facility, moved quickly to seize $37 million from builder.ai's global accounts when they discovered the financial irregularities. That's probably the biggest single recovery anyone will see. For the equity investors, Microsoft, SoftBank, Qatar Investment Authority, and others. The outlook is grim. Equity holders are at the bottom of the priority list in bankruptcy proceedings. They only get paid after all the secured and unsecured creditors are satisfied. Given the scale of the debts versus the minimal assets, there's unlikely to be anything left over. There might be some limited recovery through asset sales. The UK administrator Alvarez and Marshall is trying to auction off builder.ai's intellectual property, including the code libraries and whatever functional technology exists. But given that the core AI claims were largely fraudulent, there's not much valuable technology to sell. The investors could pursue director and officer insurance claims against Dougal and other executives, but those policies typically have caps and exclusions for fraudulent conduct. Some investors might try to recover money through civil litigation against Dougal, Doot, and potentially Verse Innovation for their role in the round-tripping scheme. But international litigation is expensive and time-consuming with no guarantee of success. The harsh reality is that when a company commits systematic fraud on this scale, there's usually very little left to recover. The money has been spent on operations, salaries, fake growth initiatives, and personal enrichment. For investors who put hundreds of millions into builder.ai, this represents a near-total loss. It's an expensive reminder that even the most sophisticated due diligence processes can be defeated by determined fraudsters. Sachin Dev Dougal, the mastermind behind the builder.ai fraud, is currently living in Dubai, conveniently beyond the immediate reach of both U.S. federal prosecutors and Indian money laundering investigators. Dougal appears to have planned his exit strategy well. As the walls were closing in during early 2025, he positioned himself in the UAE, which has limited extradition agreements with both India and the United States. The Delhi court's non-bailable warrant from 2023 remains active, meaning he faces immediate arrest if he sets foot back in India. U.S. federal prosecutors from the Southern District of New York have issued subpoenas and are conducting a criminal investigation into builder.ai's financial practices. While no formal charges have been filed yet against Dougal personally, the investigation appears to be ongoing and serious. The fake revenue scheme with Verse Innovation continued until 2024, well after early warning signs should have told him to wind things down. His decision to accept the EY Entrepreneur of the Year award in November 2023, when the company was already experiencing serious financial problems, suggests either supreme confidence or dangerous delusion. Saurabh Doot, Dougal's longtime accomplice and business partner, has largely disappeared from public view. Once promoted as a co-founder of builder.ai, Doot's role was hastily downgraded by company lawyers to advisor and friend once the legal heat intensified. He faces his own legal challenges in India related to the broader Videocon money laundering investigation, but his current whereabouts are unknown. Verse Innovation continues to operate Daily Hunt and other products, but the company faces ongoing regulatory scrutiny in both India and the UK. The round-tripping allegations could potentially impact their own funding and growth plans. The builder.ai scandal isn't just another startup failure. It's the latest chapter in humanity's oldest story, the smooth-talking salesperson who promises the world and delivers nothing. From Charles Ponzi's postal coupon scheme in the 1920s to Elizabeth Holmes's blood-testing revolution at Theranos, the playbook remains remarkably consistent. A persuasive entrepreneur identifies an emerging technology or market trend, makes grandiose promises about revolutionizing an industry, attracts prestigious investors and advisors to create credibility, then uses creative accounting or outright fraud to maintain the illusion of success until it inevitably collapses. What's changed isn't the basic fraud mechanics, it's the scale and sophistication. Modern technology allows fraudsters to operate across multiple countries, move money instantly, and create elaborate digital facades. The AI boom has provided perfect cover for companies to claim revolutionary capabilities while doing basic outsourcing behind the scenes. So why do smart people keep falling for these schemes? The problem is that sophisticated fraud can masquerade as legitimate business risk. Builder AI looked like a reasonable bet on AI automation and market disruption. The technology claims seemed plausible, the market opportunity was real, and the team had impressive credentials. This is why traditional bank lending remains more conservative than venture capital. Venture capitalists, by contrast, are looking for companies that can return 10 times or 100 times their investment. This creates pressure to bet on revolutionary rather than incremental innovations, and revolutionary claims are harder to verify. The Builder AI case also highlights how professional credibility can be weaponized. EY's award, Microsoft's investment, the roster of prestigious advisors, all of these created a halo effect that made other investors less likely to ask tough questions. Going forward, investors need to remember some basic principles that got lost in the AI hype cycle. First, extraordinary claims require extraordinary evidence. If someone says they've solved a fundamental problem that thousands of engineers have been working on for years, prove it with detailed technical demonstrations, not just marketing presentations. Second, financial due diligence can't be outsourced to other investors. Just because prestigious names are on the cap table doesn't mean they did adequate homework. Every investor needs to verify claims independently. Third, be especially skeptical of companies operating in hot sectors like AI, crypto, or clean tech. These areas attract both genuine innovators and sophisticated fraudsters, and the line between revolutionary technology and elaborate marketing can be thin. The most important lesson might be the oldest one. If something sounds too good to be true, it definitely isn't true, unless a miracle. Building apps as easily as ordering pizza using revolutionary AI sounds amazing, but it also sounds impossible given the current state of technology. In the end, the Builder AI scandal reminds us that human nature hasn't changed much since the days of snake oil salesmen and traveling medicine shows. The only difference is that modern fraudsters wear better suits, have fancier presentations, and can steal a lot more money before getting caught. The faces change, the technologies evolve, the promises get more sophisticated, but fraud remains fraud, and there will always be another smooth talker promising to change the world, right up until the moment reality comes calling. What do you think? Let me know in the comments below. If you found this video insightful, don't forget to like, share, and subscribe for more stories that dig deeper than the headlines. Thanks for watching.